Hello traders, the title of this video is Face Volume Trading Tips One Should Know. Alright, so do you use the trading volume as a stock trader? So we know that the trading volume will help stock traders to improve their stock trading. But what is the first volume trading tips one should know? Alright, so traders were asking me to record more videos about volume trading. I have already a playlist at dayprotrader.com. You will find the playlist about volume trading at Day Pro Traders YouTube channel. All right, but today I want to highlight a few things about stock volume trading. You'll also see a web page at www.dayprotrader.com. It's about stock volume trading. You'll see videos. About volume trading. So first thing first, what are we looking for? We want, so if the financial instrument is going up, very often we have a surge in trading volume. So you have to understand what we mean by that. You say the price should go up. If it's truly, if there will be a trend, if the price will go up, it will go up under a high trading volume, increasing trading volume. All right, but it doesn't mean that all along, all the way. So it doesn't mean that the volume will be going up from here, all the way up here. All you need is a surge in trading volume, either at the beginning, usually at the beginning of the bullish move. That's what we want to see, a surge in trading volume that is in fact the source or the origin of or the fuel of that bullish progression. If you look carefully on my chart here, you can see that the price went down from here up to this point, but during that time you can see that the volume, you see here, it went horizontal and then boom, up. So you can say that the volume was going up. It went up under a high volume. If a stock is going up or down, first, if the stock is going up under a low trading volume, it's bearish. So it means that it's going up, but it does not have a fuel, so to speak. It will come down very fast. It will come down crashing. But if it's going up, anyhow, it has enough fuel, so to speak. If it's going up under a high trading volume, there is a high chance that the move will continue. So therefore, if a stock is going up or a financial instrument is going up, we want to check the volume bar. Is it going up under a low volume or under a volume bar that are increasing? So you can see here the volume was normal and then suddenly boom, this candlestick bar, this volume bar is alerting now that there's more chance. So you see here, I'm on the quarterly chart now. You can see. So here we have this surge in trading volume. After that, for another 6 months, because we have 2 quarterly candlestick bar, for another 6 months, the stock continues to go up. But the first thing one should understand, with the first volume trading tips that I want to share with you today, is that if the stock is going up, under a high trading volume, all right. If it start pulling back, we want it to come down under a low trading volume. That will indicate to us that there is a high chance that the price will continue to go up. Have I make myself clear? Let's say it again. So you can see here we have the volume was increasing. You can see normal volume and then it surged, boom, and then the stock continued to go up. Now it start coming down. Yes or no? Right? If it start coming down here, we want it to come down under a low trading volume, a volume that is decreasing. You can see here, you see high volume, start going down, That's what we want to see. All right, that's what we want to see if it's coming down. So if it's coming down under a low trading volume, it means that there is no demand to sell the stock. All right. Here there was a demand to buy the stock, so it's going up under a high trading volume. This is the first volume trading tips one should know. All right, so here it is, come down under a low trading volume. Now, if you see that, look for candlestick pattern. All right, look for candlestick pattern, look for bullish chart pattern. All right, in this zone. So here I can talk because I'm on the quarterly chart. You see that it going down, bearish candlestick bar. Now look at this bullish candlestick bar here. We have here, a price start changing direction here. This is very good for us because it went up under a high trading volume, under increasing trading volume. Now it's coming down under a low trading volume, indicating to us those are not serious, so to speak, serious sellers. They are selling under a low trading volume. There is no demand to sell the stock. Therefore, there is a high chance that the stock may continue to go up. But you can see that in this session here, you see this session here. Look at this session here. Okay, this session here, let's color it now into orange. Okay. So after the low trading volume, you see that the price start going up. This time you don't see any more surge in trading volume. Why? The reason is you may be saying, oh George, it's not going up, we don't have a high volume here. But it's all here because look at this one. Okay, more than 420 million shares has been bought in one quarterly candlestick bar here. More than 400 million shares has been transacted. So those who bought this stock did not come out at all. They're still in the trend. So it's good for us. Though here we do not have a surge in trade volume, those are the first buyers who bought this stock. They are still in place. So the surge in trade volume here is still controlling this move up here. So the price can go up, under a light, L-I-G-H-T, under a light trading volume if we had an initial surge in trading volume. So there was an initial surge in trading volume, which is the source or the fuel of the bullish trend. All right. Now the price start going up. If it start pulling back, we want to check the trading volume. Now it's coming down under a low trading volume because we have an initial surge in trading volume. There is a high chance that the price may continue to go up, but this time does not have to be under a high trading volume, can be a light trading volume. It doesn't mean that we cannot have a surge in trading volume in this session here, but price can continue to go up under a light trading volume. This is the first thing one should know about, with the first volume trading tips one should know. Very, very important. Now look at this session here. So the point I'm making here, if a financial instrument is going down also, it must go down under a high trading volume, which means there is a demand to sell it. All right, so it's going down. So we want to see the initial surge in trading volume, which means we must have serious sellers, so to speak, at the beginning of a downtrend. So then, after the price starts rallying up in a downtrend, we want it to rally under a low trading volume, which means there's no demand to buy it. So if the initial force is bearish and there is no demand to buy, it means that there's a high chance, not guarantee, high chance, anything is possible, all right? There's a high chance that it will continue to go down. All right. So here, if you look carefully here, the price is going down in this session here. Okay, look at its trading volume. Is it going up? Yes, it's going up. It's going up. So initial sellers are still in place. A surge in trading volume, price going down is good news. Look at now. Now, if it start rallying up, you want to check the trading volume. Now it start going down, which means those who are buying here are not serious buyers. Therefore, if we receive a sell signal after that rally, we can look for an opportunity to sell using a top-down trading method, expecting the price to continue to go down. But we don't want to assume that because we have the price going up under a low trading volume, definitely it will come down and we just sell. There is a high chance, high probability that it will go down. All right. Therefore, we wait for the clear-cut signal to sell it. This is the first volume trading tips one should know. So you'll hear professionals saying that, oh, this stock is going up and the volume is going down. If a stock is going up but the volume is going down, well, we may say that it's running out of fuel. All right. On the other hand, if a stock is going down but the volume also is decreasing, we will say that, okay, it's running out of fuel. Like here, you can see that it's going down, but the volume was going down also. It's running out of fuel. This moved down. Here, there was a fuel to propel it up, but that fuel is the original fuel that is propelling the price all the way up here. Here, therefore, you see a light trading volume, which means the initial buyers, the first buyers, did not come out, because if they were coming out, we'll see again a surge in trading volume here, which will alert us that, all right, those who bought it here are already coming out. So we did not see any surge in trading volume as it's coming down, which means the initial buyers are still in place. In theory, my friend, in theory, you'll be coming across different scenarios like this, and you'll be thinking, George, it doesn't make any sense. In theory, all right? But then, because the first buyers are still in play, did not divest, all we need is more, retail trader continue to buy the stock. All right, so this is what we call light trading volume. Now it's still going up, going up, going up, going up. The initial buyer is still in place. If they come out, the price will come back down completely to the starting point. They didn't come out. Now we have, ordinary traders, a bit of more orders coming in gently. The initial fuel, we didn't run out of fuel so far. It's still in play, which means they did not come out. We have more people adding more fuel to the original fuel. Here it is going up under a light trading volume, which is normal. Here in this session, you can see it's going down under, a high trading volume because the volume is increasing. Now we need to make sure if we have a rally in a downtrend, is it under a high trading volume? If it was under a high trading volume, we will assume that those initial sellers are coming out. But they did not. That's why we do not have another surge in trading volume, which means the initial seller are still in place. All right? In theory. Therefore, we will expect a continuation of this move down. But as always, separate the theory from the reality of the market. So practically trading, we have a bearish trading setup. Now we will implement a top-down trading method to trade it. If there is no signal, we will not sell. If, for instance, you can see why we need to be careful. Or you may say, Joe, it doesn't make any sense at all. You're just going around. But the reason is, you may have suddenly, if you have suddenly here, another surge in trading volume, then we need to investigate. We need to investigate who are these people. Are they buying or are they selling? All right? So that's why, though we see it like this, we just use a different time frame trading method to trade it. This is the first volume trading tips one should know. And I was told that when I came into the financial market, people said to me, if a stock is going up, under a low trading volume, professional are laughing, thinking to sell it. All right. Then I try to understand what's going on. They say if it goes up under a high trading volume, if it's pulling back, we want it to come down under a low trading volume, indicating to us there is no demand to sell it. A possibility that the trend may continue, provided that the initial seller are still in place. Yes, they are still in place because we did not have a surge in trading volume when the price was going down. Because the initial buyers, if they want to come out, they must sell. And if they are selling because they are the one that created this surge in trading volume, you see a surge in trading volume here. All right. So this one here, you see here, people were buying. So as they see coming down, this volume bar here, so price pull back to this point. There were other people buying here, joining the first people, those who were selling. This is what they call the dump money. Those who are selling instead of buying, and they join, then they buy here. And now again we have a light trading volume, and it's a boom, 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 boom up. This is the first volume trading tips one should know. All right. So to summarize the video, stock, if there will be a trend, we must have initial buyers. So we want to see a surge in trading volume. But as the trend is going up, the pullback in an uptrend should be under a low trading volume. If the pullback happens to be under a high trading volume, it's alerting us that probably those who bought it at the first time are coming out. So we need to investigate what's happening. But we don't want to trade the trading volume. This is the mistake that we don't want traders to do. We are not trading the trading volume. We acknowledge the trading volume. Now we pay attention to the price. As you can see here, a surge in trading volume. Price went now. Price pulled back under a low trading volume. All we can say here is that we have a bullish trading setup. Now we will implement a top-down trading method to trade it. You can see the first candlestick bar here was acknowledging this prior high here. So you may say, all right, because the stock, do you have initial buyers still in place, price pullback under low trading volume, I don't want to risk it. I'll look for the breaks above, retest. Look at the tail of this candlestick bar, was trying to retest the prior high. This is a high probability trading zone here. Here we can see it's going down under a high trading volume, meaning that those are serious sellers. Now we want to see the rally. Now there's a rally. Oh, they are not coming out because we didn't see a surge in trading volume. All we can say, we have, okay, a high probability bearish trading setup, but we only sell if we have a sell signal by applying different time frame trading method. All right. So this is the end of this tutorial about the first volume trading tips. One should know, very important, if you are trading stocks, you're a stock trader, you must understand that. All right. So go around on the monthly chart. I recommend to trade when they are using the volume bar. Use the monthly chart, quarterly chart, and yearly chart. Do not play with the volume bar on the lower time frame, though we can do that. It's more solid on the higher time frame. So we are using the volume bar on the higher time frame to find high probability trading setup, and then we can go to 4-hour time frame, 2-hour time frame, 30-minute time frame, 50-minute time frame, 5-minute time frame to make excellent trading, day trading, swing trading, and position trading decisions. All right. If you have any question or suggestion, feel free to put in the comment section. And in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about the first volume trading tips one should know. Speak to you as soon